Yeah, so I want to talk about how the fact that you cannot beat the market, and that's golly, everybody sort of thinks like that, and I am such a minority to think like that. Even the whole Dave Ramsey folks to think like this, that they can beat the market and they can sort of game things and all that kind of stuff, and you have to really realize what's going on there, and I want to talk about that. So, if you don't know me, I'm Professor Dave Massac. I'm Associate Professor of Innovation Strategy and Entrepreneurship. And I created this whole Reciprocity Project to give back as much as I possibly can. There's so many people who help me out that I want to pay the favor for it to help you out. So I really do believe in the sort of University of Chicago style, view of the market, that it's really hard to actually beat the market. And often what the sort of recommendation that is given, and I've got, I like the general recommendation of what Dave Ramsey suggests. I do, behaviorally, he's bang on with a lot of that. I mean, even to this sort of appeal to a higher being, he's bang on to all of that, in terms of, as regular humans, people actually do things. We need to have, spiritual influence or something, some support, right? I'm not saying whatever it is, but we need that stuff, right? Like all that stuff is actually pretty good. I don't, some of the stuff I don't necessarily condone, but one of the ones that I get a little frustrated with, is the fact that you can beat the market. And we hear this, and this is all part of the sort of gaming part of, most people are getting rich quick, or, that they've got some secret solution to beat the market and everybody else is stupid. It's a market, which means there is many players that are playing, which means if there's somebody that is being stupid, there's somebody that's smart that's going to look at that and adjust the price. They're going to buy that particular asset and the price is going to be changed. So the only time that you can maybe, have some quote unquote beat the market is in markets that are really, they're stigmatized, but even then they're probably properly priced. Or people just don't know anything about them. They're so weird and idiosyncratic that nobody knows about them and nobody cares. Then maybe there's that possibility, but even still, I don't even go there. So when I assume you cannot beat the market, and I want to invest broadly in, just the economy, and I am broadly think about how can I do that in the most effective way, where I'm capturing, the best companies that are doing the best things, and that's just really just getting index funds, really something simple that's broad-based, maybe a fraction of what I'm doing. So I also invest in this whole Reciprocity Project. That is a big investment for me, but it's a tiny fraction of what we sort of invest in and what we do day in and day out. All of that, is all thinking about I cannot beat the market. The only thing I can do is match what the market is doing. Now, if somebody says that they can beat the market with some mutual funds or something like that, it means that they're not adjusting for the risk that is associated with that. And so maybe the beta, for example, this beta thing, might, they can get an alpha that's better than the beta or whatever. I forget what the combination is. I think that's what it is. It still means that you are thinking through that is happening, and you thinking through that thing is a risk. And that is a risk that you're getting wrong, and you can still be, it's still flawed, right? It's still a formula. It's still based on some arbitrary thing. And so there's people that are smart enough, and there's computer programs. This is the thing that people forget. The market is, it is not people anymore. It's computer programs that are with millions and millions and millions of lines of code with the smartest people in the entire world working on these problems to incrementally figure out what these particular patterns are. You're crazy to think you're ever going to beat that. As an individual person, it's hubris, right? Like you think that you're better than everybody else, and that's really what it is. And so, what can you do? You just do boring, plain, invest broadly, do it day in and day out. And what you're doing is actually just doing what investing should be and what it's intended to do. As you're giving money to companies in the economy that might do something great with that. And when they do something great with that, you'll get some return from it. And some won't, most won't. Some will do well, and then you'll, as an aggregate, across the board, if you add it all up, you'll do okay. And the historical norm is somewhere around 10%, right? Like, give or take, over many, many years, decades and decades and decades. It's somewhere around the whole 10%. I think like 8 to 12%. I think it's... somebody's going to quote me on this and it's going to be off, but I think it's something like, in real dollars, it's 8%, and non-inflation adjusted, it's like 11 or 12 or something like that. I can't remember the exact combination, but somewhere around there. So what that means is that over the course of 7 years, with those numbers, it generally doubles every single year by doing that. And so that's what you're looking at, is investing most of your money just kind of broadly, I do not think I will ever beat the market. I think that's foolhardy. And anything that I do, if the whole Reciprocity project takes off, I'm going to bet you dollars to donuts there's going to be some rival or competitor that enters and does a really good job, and all of a sudden I'm competing with them, right? I'm going to bet you dollars to donuts that it happens. In fact, that does happen, and I've sort of seen things like that, the start of this stuff. Whatever. But the only thing I can do is just do this repeatedly and, just keep plugging away and keep sort of investing in something, growing it, investing it and growing it, investing it and growing it. And even if I don't beat the market, let's say I make a 5% return, golly, I'm still going to be damn happy that I made a 5% return compared to what other people do, which is blow that money and it's all disappeared, or, they put it into, just a straight bank account. I'm going to be happy with that. That's actually pretty good. So, I think that there is a lot of emotional confidence when you stop thinking that you're going to beat the market, and you start having that sort of security and self-confidence just to say, hey, I'm not that smart, I'm good enough, but I'm going to just do this. I think that there's lots of smart people out there, and I'm just going to invest in them day in and day out and be boring. Not going to look for all of these sort of fancy, highfalutin things, and just do it day in and day out. Take that 10 to 20%, so 15% is a nice number. 15% of whatever I make, invest it broadly in index funds and mutual funds and all that kind of stuff, and just do that over and over and over again. I'm going to do okay. And that's what happens. And then everybody else is sort of trying to beat the market and game it and pay attention to all that crap. Are going to lose out. And they're going to be all stressed out, and they're probably going to lose out in a lot of opportunities as well. So with that, hopefully you gained a little bit. Take care and have a wonderful day.